I'm Merrill Hoopengardner, the president of NTCIC, a longtime CDE in the New Markets Tax Credit Program. I'm delighted to have the opportunity to introduce Jodie Harris to you today. Jodie has a tremendous amount of experience in the New Markets Tax Credit itself, and also in the broader community development field. She originally hails from Philadelphia and has worked both within the Treasury Department and as an independent consultant running her own nonprofit organization, providing technical assistance and supporting organizations and small entrepreneurs. She's been actively involved at the Treasury Department in several different stints over time. She began her Treasury-related career in 2007 as an associate program manager and later served as a senior advisor to the director of the CDFI fund. She was most recently the director of the Treasury Department's Office of Small Business, Community Development, and Affordable Housing Policy. And she had the lucky opportunity to join the CDFI fund as director at the beginning of 2019, probably not realizing how interesting things would be over the last couple of years. In particular, in this last year, just in fiscal year 21, she currently administers 6 previously existing programs within the CDFI fund, as well as 2 new ones, and an emerging program that was recently funded by Congress. So by the end of this year, she will have the distinct honor of having awarded more grant money through the CDFI fund's various programs than any other director previously in the history of the CDFI fund's programs. So we are delighted to have you here today, Director Harris, and we would love to hear some of your remarks about your experience leading the CDFI fund through these interesting times. So I will hand it to you now.
Great. Thank you, Merrill, for the great introduction. I don't think I had really thought about it that way, but the amount of money that we are good stewards of is at unprecedented levels. But yeah, it's all happening during a time when there's so much happening externally. So I'm very thankful to be in this role and thankful to you all and everyone with the coalition for inviting me back to speak to you. There'll be CDFI fund staff joining after my remarks, and they'll get into the programmatic and the compliance and the reporting details of the New Markets Tax Credit Program. You'll also be joined by our new Deputy Assistant Secretary, Noel Pollo, who will give some remarks. And so it's great to have him on board, and he can talk about the broader picture and the administration's priorities. But for now, I'll focus my comments on the broader activities of the fund and touch on all those programs and funding dollars you mentioned, Merrill. So I know there are a lot of organizations tuning in who are also CDFIs and participate in a number of CDFI fund programs. So for those of you who are not CDFIs but follow along, I hope this information is useful to you as well. Of course, the big news of the week was on Tuesday when Vice President Harris and Secretary Yellen announced $1.25 billion in the Rapid Response Program. We gave awards to 863 CDFIs across the country. That is more than 70% of all certified CDFIs who submitted an application. And actually, in total, they all requested $2.9 billion. So we could have used the whole $3 billion in the statute for the Rapid Response Program. But I'll give you a few details if you hadn't had a chance to look at the press release, because it's significant how much funding is getting into our communities in such a short period of time. For those of you who have applied to our previous programs, you'll notice month 4, we're still doing reviews. Month 4, we're still looking at applications, but the team really stepped up and did these awards in half the time. So I'm really thankful for all the efforts that the CDFI staff did to make this happen, hence the name Rapid, and hence the name Rapid and getting the funds out the door. But a few stats, 58 organizations who received awards are committing their awards to Native American, Native Alaskan, and Native Hawaiian communities. They all received a total of $54.6 million. We have 28 organizations who primarily serve the U.S. territory of Puerto Rico, and they received $47.3 million. actually one of our higher numbers, given the percentage of certified CDFIs. We had 90 organizations designated as MDIs receive awards. They're designated MDIs from the FDIC and NCUA, and they received a total of 133.9 million. And the big news of the size of the awards, as this is also not just total amount that we were able to give out, but actually the award size is the highest it's been in a couple years if you compare it to our FA grant and our other grant programs excluding CMF. And so 65% of the applicants received a maximum award of $1.8 million. And then we had a small group, about 15%, get the minimum award of $200,000. So again, all of this is available on the website, but I just wanted to highlight the diversity and the breadth of groups who received RRP awards. I mean, this is an unprecedented level of flexible capital that will allow CDFIs to help business keep their doors open, to help families make ends meet, to just make sure that the important community facilities and resources are available. And so we're really thankful we had the opportunity to provide the funding, and we're looking forward to seeing what the CDFI industry does with the funding. As you noted, Merrill, there's also in the statute, the December recovery legislation provided an additional 1.75 billion to deliver recovery resources to CDFIs to expand financial activity in distressed communities and to minorities that have significant unmet capital or financial services needs. So that program we are dubbing as MLP, we like our acronyms, the Minority Lending Program. And the interesting part about that funding is that there's a piece in there that directs us to provide 1.2 billion of the 1.75 to organizations that will be called minority lending institutions. So we're taking a little bit more time with that pot of money than we did with the RRP in order to be a little bit more thoughtful, because now we're in the process of creating a designation that will apply to a subset of CDFIs. And we want to make sure that we're able to come out with a request for comment on the accountability piece. And we're also able to structure the program in a way that benefits those organizations as well as other CDFIs that are serving these underserved communities. So we're taking a little bit more time with that program, but we will have some more information in the near future. We also have our regularly scheduled programs. And so the team is doing a bit of double duty in a number of areas. So I'll just talk a little bit about the programs that we receive appropriated funds for that are currently open or in the process of wrapping up. So we have the small dollar loan program, and many of you may remember from the Dodd-Frank Act of 2010 that this program was established to provide loan loss reserves and technical assistance for CDFIs and CDFI partnerships that were offering small dollar loans less than $2,500. We received appropriations for that program in the 2020 budget, and so now we're doing the inaugural round. That award round is still open. It closes June 29th. So hopefully if you are interested, you provided your SF-424 by the deadline and you still have some time to submit an application. We're looking to make those awards in September. The Capital Magnet Fund is preparing to open. You probably saw a notice from us that offered a webinar for folks to learn more about Capital Magnet Fund. This year, I mean, we're talking about unprecedented dollars coming through the CDFI fund. This year, the GSE allocations have topped 383 million for Capital Magnet Fund. That's twice any other appropriation or allocation we received for that program. And so we're looking to see how we can structure the round in the context of our other programs, scheduling wise, but also to make sure that we make a few tweaks to the program based off of the request for comment that we put out a few months ago to incorporate the industry's feedback, but we will be opening that round this summer. And then there's also something, if folks are following the CDFI budget process, that Congress has, the administration, Congress still has to vote on it, but the administration has proposed to expand CMF to 12 billion, which would be 2.5 billion over the next 5 years. So we hope to have more information on that in the future. The program, I'm sure everyone on this call is waiting for, the New Markets Tax Credit Program. Christopher Allison, our program manager, will talk more about that, but we expect to award those allocations this summer. And then lastly, the Financial Assistance and Technical Assistance Award. So in our calendar, we had the Financial Assistance and Technical Assistance Award, or CDFI program, and NACA program underway at the same time as RRP. And that staff was literally the staff that was doing double duty. So what we're doing now is we're going to do something similar to what we did in 2019, where we'll announce the Technical Assistance Awards first, and then we'll follow up with the Financial Assistance Awards. But those will all be done during this calendar year of 2021. And then lastly, for any groups that may apply to the Bank Enterprise Award Program, we have pushed that out a few months in order to give people some breathing room when it comes to all of our applications and our requests for comment. And so we'll be opening the Bank Enterprise Award Program later in the year. And finally, I will touch on the conversation that has been happening for years and years, which is around certification. And as you all know, we put out a request for a comment last year. We received 50 unique comments, very thoughtful comments that we are taking a serious look at and making sure that we incorporate what we can in the creation of a new certification policy and application. We also have changes to our annual certification report that we propose, as well as a new data collection that we're proposing, which is being dubbed as the CTLR, or certification TLR. And what that will do is allow us to collect data on all certified CDFIs, which I think will be a great boon to the industry, as well as a helpful data set for the CDFI fund to help inform us on what the total industry is doing, not just those groups who apply and receive awards and have to report as a part of their compliance period. And I think that that data set and this need to collect information on the entire industry is important as we see the level of attention to the CDFI industry continue to increase. Everyone is acknowledging, whether it's Congress, whether it's private sector partners, even within the government, we're all acknowledging the role that CDFIs and CDs have to play in this economic recovery. So I think the CDFI application process, or the certification application process, will allow all of these mission-driven institutions to kind of recertify with new parameters that allows us to make sure that the mission matches with the products, that the accountability is strong, and allow us to collect important data on what the industry is doing. So before I introduce the CDFI Fund panel, I do think we have some time, Merrill, for questions, or are we going to hold those for the panel?
I think we're going to ask you first if you can stick on while everyone else is joining. So for folks who joined right before you started to speak, they had an opportunity to hear Senator Blunt talk. And as he and Bob Raposa were having their discussion, they highlighted that we've recently received an extension of the New Markets Tax Credit, 5 years, $5 billion per year, which is the largest expansion of the program since it was created. So I'm curious how that is shaping your work within the CDFI fund now that there's a little bit more of a runway for how the program is going to be stable and expanding, and if that's giving you some new or different ways that you can approach program administration.
Sure. Well, we definitely appreciate any movement towards something that resembles permanency as possible, because it does help us stabilize our resources. And I'm sure Christopher can talk more about the need to be able to plan, to have adequate staffing, and the desire to have the calendar get a little bit more back on track while we're doing more within the actual calendar year of the allocations. And so we think that 5 years will allow us to achieve that level of stability and allow Christopher to ramp up the way he needs to in terms of staffing and resources. But of course, we are supportive of any type of permanent authorization, which I think will help Christopher and the CDFI fund plan going forward. We work New Markets and to the calendar, everything. All of our other programs are appropriated annually, and I doubt there's as much conversation about any issues in terms of stability. But having New Markets around for 5 years will definitely help us in our internal management.
That's great. And then one more question looking the opposite direction. So now that New Markets is in its 20th year, with the 17th round pending for dissemination, are there things that you all have learned over this arc of time in the program that you feel like you can say, this is what New Markets stands for, and these are some primary lessons learned about its impact?
That's a really great question, Merrill. I don't know if I can say right now, one or two things that kind of jump out at me in terms of a best practice or lesson learned over the last 17 rounds. I will say, though, that the testament that is delivered through all of the applications, all of the interest, all of the oversubscription, all of the commitment of the CDEs just kind of further underscores the need for this type of tax credit and how this tax credit helps to fill a gap in our community development ecosystem. And so I think, if we have the time and the resources, this is another thing about a permanent program, or at least 5-year stability, to give this team breathing room to do that type of research, to be able to take a few months or however long to look back over the last 20 years and develop those kind of ahas and best practices and lessons learned. We would love to do that. But I just think the fact that after 17 rounds, we still see the need, we still see all of the projects that need funding, but in recognizing that there's a true indefinite place for this tax credit, and it is making a difference.
That's great. Well, I see your fabulous staff has joined us too. So we're pleased to have them here today. I can introduce them, or I can have you introduce them, whichever you prefer.
Well, I'm happy to say hi to my team and introduce them to everyone else.